Good morning, everyone. Welcome to Macalvins' very first webinar, which is focused on obviously a very topical point at the moment, coronavirus business support. I hope you're all safe and well and have been enjoying the weather this week at home, unfortunately, as we all conform to the social distancing guidelines that we've been given. Great to see such a fantastic turnout for our very first webinar. Very impressed with that. I think it's safe to say we are all 2 meters apart. My name's Tarek. I am the CEO of Macalvins, and I spent the past 25 years helping businesses grow and expand both the UK and internationally. I'm accompanied today by my colleague David Seagal. He's had almost 40 years experience in the trade. I'm telling his age now. One of our most seasoned professionals, expert in supporting owner-managed businesses with their tax and finance, and also accompanied by Associate Director Muntazir Bimji, who has been really the oracle for COVID for Macalvins for the past 2 months, and has really brought on a lot of knowledge across the practice. He's also got almost 10 years experience in property, real estate investments, and so on and so forth. So we're here, as I said at the beginning, I'm going to take you through the government schemes on COVID related to COVID-19, and then we'll open up to Q&A at the end. Please feel free to send questions through the chat, which I believe is at the bottom of your screen. So any things that are topical related to the subjects we're going through, raise them. We'll try to address them as we go through. If we can't, then we'll deal with them towards the end with any other questions that we've received over the past couple of days. So without further ado, I'm going to hand over to David, who will be taking us through grants, and then we'll move on to Muntazir, who will take us through the job retention scheme and also the Corona business interruption loan scheme. So over to you, David.
Thank you, Tarek. Thank you very much. And I join Tarek in welcoming all of you to our webinar today, and thank you for joining us and hopefully making it all worthwhile. I'm going to cover a couple of areas now, the first being grants and the second being the self-employed income support scheme. So beginning with grants, the first point I would like to make is that this area of support is being administered by local authorities. That's important for people to understand. It's a support scheme to help those businesses that occupy property that are based in England, and so any queries about this and any claims are made through your rating authority, your local authority. Now, the grants offerings fall into 2 camps. One is called the Small Business Grant Fund, and I'll deal with that first. The Small Business Grant Fund, as I said before, you have to be based in England, you have to occupy non-domestic property, commercial property for the purposes of your business, and you need to be eligible either for small business rate relief on that property or rural rate relief, which is less likely to apply, but is an eligibility factor. You cannot get funding under this particular scheme for any properties that are occupied for personal use, such as stables or beach huts or moorings, or car parks and parking spaces. The level of grant under this area is up to £10,000. And we were told at the outset that those who qualified for this would be contacted directly by their local authority to inform them that they considered them to be eligible. So if you believe that you may be eligible because you qualify for small business rate relief or rural rate relief and you haven't heard from your local authority, my advice to you would be make contact yourself. Make contact yourself and inform them that you believe you qualify for the small business grant, and hopefully then they will put the process in chain. I know for a fact that we have several clients who've already received their grants under this support scheme, so they are dealing with them fairly quickly. So that's the Small Business Grants Fund. Now, moving on to the Retail, Hospitality and Leisure Grant Fund. this is specifically aimed at businesses that operate in those sectors. And there's been a loose definition given by the government as to eligible businesses. They include shops, restaurants, cafes, bars and pubs, cinemas, live music events, estate agents and letting agencies are included here, and hospitality, in anyone operating in the hospitality business, which obviously includes hotels, holiday lets, that kind of thing. Again, if you believe that you fall into that sector and you haven't had any sort of notification from the local authority that you're eligible to apply, then please do make contact with them. The grants in this area are up to 20, or the fact they are 25,000. If you're deemed to be eligible, that is the amount that you will receive. Now, one small word of caution. I have a client who, in my view, and certainly in his view, absolutely meets the criteria as operating in the sports area, and made contact with his local authority, whose first reaction was to deny him a grant on the grounds that the description of his property on his rating bill and assessment was workshop and premises. And he spoke with them about this when they refused, because he wasn't very happy, as you will understand. And they did say to him that they've been told to base their initial decisions on the rating description of the property, but that if he believes that he's actually operating a business from those premises that fits within the descriptions of properties covered by the retail, hospitality and leisure sector, he should write in and challenge, and they will review. So the reason I'm telling you this story is that if you honestly believe that you do fit into one of those sectors and the initial reaction of your local authority is to deny eligibility, don't consider it the end of the story. Do write into them, and I'm going to support him by also writing to his local authority to confirm what we know about the nature of that business. I think the problem is this operation has obviously been landed at the door of local authorities by central government. They didn't ask for it, and they're not familiar with administering such a scheme, and they're very much looking at what the government said initially, and applying some a very blanket approach to deciding eligibility. So don't feel, if you're first of all refused, that you will necessarily definitely not apply. You can ask them to review it, and you can put in writing the reasons why you believe you meet the eligibility criteria.
David,
and the last, sorry.
David, one question that's come in from one of our guests is, how is the income from the grant taxed?
Okay, you must have a crystal ball, because I was just about to say that the last thing I wanted to mention on this subject was that, unfortunately, Her Majesty's government do tend to give with one hand and take away with the other, and these grants are indeed taxable, but they are only taxable if, with the addition of the grant money, your business makes a profit. So if, notwithstanding the fact that you've received a grant, you don't make a profit from trading, then there will not be tax. But if you make a profit, then the grant becomes taxable income, I'm afraid. Okay.
I guess your losses also become smaller.
Well, correct. I mean, you would obviously be able to utilise those losses against other income anyway if you've made them, but the grant itself is only taxable to the extent that you've made profit in the year in which you've received it.
Okay.
So there's a little bit of an out there from taxation, but basically the grants are taxable, the 10 and the 25.
So I just want to throw a poll out to everybody. If anybody has received any communications from their local council on their eligibility for any of these grants, it would be good to, if anybody could just send a message on the chat just to say that they have been successful, they have been contacted. It'd be good just to understand from all the people that we've got there whether there is money actually being paid out to people. Thanks for that, David. And I think you're going to be talking about the self-employed.
Yeah, so moving on now to the self-employed income support scheme, which I suspect will be of interest to many of you. This is the scheme that was introduced effectively to put the self-employed in a similar position to the employed who are covered under the furlough scheme. So it covers a grant, which sadly, again, I have to say is taxable, of 80% of average monthly trading profits up to a maximum figure of, we're saying in the slide, 2,500 per month. I think in practice they tend to make these payments 3 monthly, so it's up to £7,500. And here I do have a success story from a client who's already made a claim under SEISS and emailed me yesterday to say that he's received his £7,500. Now, the eligibility criteria here are that you do need to be trading, of course, and you do need to have suffered some diminution in trade from coronavirus, and your profits need to be no more than £50,000. So if your business declares profits in excess of £50,000, I'm afraid you do not qualify under this scheme. The other thing that HMRC will look at, and HMRC are the people that administer this scheme, they will look at whether or not you're in the last year, your 2018-19 self-assessment, your trading income was at least 50% of your total taxable income. That's another way of saying the under item 2, where we say equates to non-trading income. I've just put that in a slightly different way to you because it may be more easily understood. If your trading income is exceeded by your non-trading income, then you will not qualify under the SEISS. So that's if you're the other way around, if your trading income exceeds your non-trading income, you will not qualify. So at least 50% has to come from trading. Although the eligibility is decided by looking at your 2018-19 self-assessment, if you traded in the previous 2 years, then they will average the whole 36 months of income in arriving at the average monthly trading profit figure. If you didn't trade in the previous 2 years, it'll just be based on 2018-19. But if you do have 3 years history with HMRC, they will use those figures to calculate your average monthly trading profits. Now, what you need in order to make application under this scheme is fairly simple. You must have a gateway account, a personal gateway account, and to set that up, you will need your UTR number and your national insurance number. And if you're struggling with doing that in any way, obviously contact us. We can help you there. Go to www.gov.uk, which is the first port of call for everything we're going to talk about today. And there is a link there that will take you through to setting up a gateway ID if you don't already have one. And once you have that, you can then proceed with the application, which is, again, reasonably simple because there's no figure work required because HMRC obviously have that information from the self-assessment returns that you will have already submitted. I've already said that this is taxable, and this grant, assuming let's say you qualify for the maximum amount of 7,500, that will then need to go on your self-assessment tax return for the year 2021 because you'll be receiving it in that tax year, and sadly it is indeed a taxable amount.
And what's the window is there a time limit when applications can be made?
No, there is a time limit which I will mention on the submission. If you haven't submitted your 2018-19 self-assessment, they've extended the deadline to the 23rd of April. Now, under normal circumstances, you would have had to submit that by the 31st of January. But for the purposes of SEISS, although it will be late if it's submitted beyond the 31st of January, it will qualify you for SEISS, provided you've done it by the 23rd of April. I'm afraid anybody that should have submitted a self-assessment return for 2018-19 and hasn't done it by now, it's too late to submit it in such a way that you will qualify for this scheme. But you will be okay as long as you submitted it up to the 23rd of April.
Okay, very good. And we had one answer back from our guests that they received the business grant, but they would decline the SEISS. So,
well, again, I would say the same as I said about the grants. If you don't agree with the decision that's been made on eligibility, do in the first instance talk to us so that we can listen to the reason why you don't agree, because it's not the absolute end of the story. And if we agree with you that you do possess eligibility for a support scheme and you're being denied it, then, you know, we would happily get involved on your behalf and try to reverse the decision.
Great. Thanks, David. Okay, so I think we're turning over to Muntazir, who's going to take us through the coronavirus job retention scheme.
Good morning, all. Thank you, Tariq, for the introduction. I'm Muntazir Bimji, and I'll be talking on coronavirus job retention scheme, as well as the coronavirus business interruption loan. By now, everyone would have heard the term furlough. Obviously, previously it was unknown to us, but it's a term mainly used in the US, which means when an employee is being laid off or is under leave of absence. So the government has introduced a scheme to help employers to pay for the employees who would have been made redundant if the scheme was not available. So what is the scheme all about? So government is providing or contributing to 80% of employment costs of up to 2,500 being kept. So if you are earning more than that, you'll only be able to claim 2,500 per employee per month. This also includes the NI contributions and the pension costs. The individuals or the business who are eligible are all UK organizations, and this includes all the staff who are within their payroll scheme as at 28th of February 2020. So it could be employees who are agency staff, it could be part-time employees or zero working hours staff as well. As far as they are within your payroll, they will be eligible for the furlough claims. And also the deadline was extended from 28th February to the 19th of March. So if you then subsequently had employed individuals, say in March, they will still be eligible for the furlough claim. One thing to note is that before employees are furloughed, it is a best practice to get a consent from that they agree to furlough, and depending on your employment contract, we have advised most of our clients to make sure that there is a written confirmation. And it is also advised to keep the record for at least a 6 years period. And how do you need to make the claim? So it is fairly straightforward process. There is an online portal, and your agents, your acting agents, so in our case, it will be us. We can apply on your behalf, and what is needed is you need to have the payroll reference number, the UTR, your UK bank account, and you need to calculate your furlough claim, and you post it on the portal, and usually you get the payment in within 7 to 8 working days. At the moment, employees who are furloughed, they are ineligible to work, so they must not conduct any work. But to bear in mind, recently there has been some update from the government, and the scheme was extended all the way up to October. But any employees now coming to work from 1st of August on a part-time basis can still be furloughed. However, the details around how much the employer will contribute and what are the exact final details are still being finalized by the government. So as and when we find out the information, we will be informing you. One more thing to note is not only employees, but also directors and sole directors of companies can also claim furlough, provided that they are not undertaking any operational work. However, we understand that there will be some statutory duties that they need to perform, such as filing of the accounts. So as far as they're doing minimal operational work and not generating any revenue, they will also be eligible for furlough claims.
Great, Winston. Thank you for that. And I think I also learned something recently, and it's a slightly grey area, that staff that have been furloughed who can still be made redundant, and the furlough payment can continue to cover part of the notice period of the redundancy. So if somebody's on a month's notice, then the furlough payment can be used to pay off that notice period up to the 80% £2,500 rule. But what I also saw was the guidance from the law firms was very much that better to top it up to 100% than to pay the 80% or £2,500 cap if you're going down the redundancy route. Like I said, it's a little bit of a grey area. It's not really Macalvins' expertise, but I thought I would share that because no doubt a number of you may find yourselves in that situation going forward.
Yeah, and some of the practical experiences that we are facing is because now the lockdown has been slightly eased. Most of the employers are now trying to get the employees back to work, and we've been asked questions around how can we bring back our employees and whether they can still be furloughed and continue working on a part-time basis or on a reduced hours. Unfortunately, at the moment, any employees, as mentioned earlier, who are furloughed cannot undertake any activities. If they wish to volunteer, they cannot volunteer for your organization or any linked association. However, they may work elsewhere or volunteer elsewhere. So just bear in mind, if you are intending to bring your employees back to work, then you will not be able to claim the furlough element. The other thing also I wanted to point out was directors, especially who are on annual pay period, they are also eligible for claiming on the furlough grant. However, there is a caveat to it that if their RTA submission, which is the payroll submission, wasn't done so before the 19th of March, that deems them ineligible. So it is slightly harsh and unfair because most of the annual pay period naturally would be submitted at the end of March or at the end of a tax year. So we have been in correspondence with HMRC just to let all the clients know here and all the participants. And we haven't had much luck with HMRC, and we are hoping that they will issue additional guidance and hopefully give us a green light where those directors can claim the grant because they do genuinely deserve it.
Great. So a question came in from Lee. It's not quite directly related to this scheme, but the previous one, the self-assessment scheme. And so the question was, has the self-assessment support scheme claim period been extended like the furlough scheme?
The answer is yes, it has been. So it's certainly not, it's not closed to application at the moment.
Okay, very good.
And whilst I'm on, I should apologise for those who heard the barking dog a few minutes ago. That's entirely my fault because I made the mistake of not muting my microphone.
I think that's evidence that we are working from home.
Indeed, if it was needed, that's the evidence. Yeah.
Good stuff. Okay, what's this? So you can take us through Corona business interruption loans.
Yes. So this scheme again was introduced early April, which relates to businesses who have suffered financial difficulty during this extremely difficult trading times. The government is providing loans from 50,000 upwards all the way up to a maximum of 5 million. These loans are term loans or invoice financing, asset financing, and also overdraft facilities. As far as your turnover does not exceed 45 million, you will be eligible for this. If your turnover does exceed that, then there is a coronavirus large business interruption loan scheme, which is for larger businesses. and the maximum amount that you can apply is for up to 200 million pounds on that. The interesting thing for this facility is that the interest payments are met by the government for the first 12 months. And normally when you draw down a loan, you would also pay a setup fee, which is based on a percentage of the loan amount. In this case, again, there are no fees incurred at outset. So the scheme is mainly to ensure that the business does not incur additional cash outflows when they get the loan. And there are over 50 accredited lenders. So most of them are the high street retail banks as well as additional banking institutions. And how do you need to apply? It's a fairly straightforward process, in the sense that the best way is to get in touch with your current bank providers and or your relationship manager. You can also go online and apply for the loan. And what are the eligibility conditions as well as the requirements? So in terms of requirements, we have noticed that most of the banks are asking for 4 to 5 key information or supporting documentation, which includes your historic accounts or a latest set of your accounts. They also would like to see your latest management accounts. So we have seen a rush from clients asking for us to prepare the management accounts for them, which is a good practice naturally. The bank are also asking for a cash flow forecast, and they have if depending on the complexity of your application, they do want to see a cash flows which shows the inflows and outflows both during the COVID trading conditions as well as post-trading COVID conditions, because they need to make themselves comfortable that during the first, say, 6 to 8 months, how is your trading going to be affected, and then going forward, what is the improvement plan, what is the strategy, and how will you be repaying the loan. One more thing to add is that there is no personal guarantees required for loan amount of up to £200,000. Anything above will require at least 20% of security. However, the government has mentioned that the security will not involve your principal private residence.
I was on mute.
Yeah, you're on mute, yeah.
So I've got another question on furlough, but I think we'll take it towards the end. It's quite a long one, so from Craig. So Craig, we'll come back to that at the end. So on the CBILS, we've obviously supported a number of businesses with these applications already, and I just wonder, again, just throwing out a poll to our guests, how many have applied either with or without Macalvins support for the CBILS loans and been successful or not. It would be interesting to hear from everybody that's here. Okay, so I think we'll move on to the bounce back loan scheme, which I believe David will be picking up on.
Yes, thank you, Tariq. Many of you will remember now, because it's only a few weeks ago, that the government came up with the bounce back loan scheme. I think it's actually BBLS as an acronym rather than BBBL, but anyway, I'll refer to it as BBLS, because the loan scheme that Muntazir has just told you about was proving quite problematic for small businesses, because it required a lot of financial information to be made available, because the banks were still asking in some cases for personal guarantees. The CBILS, as I refer to it, the CBILS loans, a lot were being rejected in the early days, and this was turning out to be very difficult for smaller businesses. As a result of that, the Chancellor, a few weeks into the COVID lockdown, the Chancellor announced the bounce back loan facility, which is a much simpler process. Now, this is for designed for small and medium-sized enterprises that are based in the UK and were established before the 1st of March 2020. Again, you have to declare that your business has been adversely affected by coronavirus. That could be because you're in lockdown, but it could be equally well because you've suffered a loss of business with customers or difficulties with suppliers. So there's a whole range of reasons why I think most businesses are definitely going to be eligible if they want to use this scheme. Now, I think there are currently 11 banks that have signed up for the BBLS scheme. And if you go to the .gov.uk website, you will be able to see a list of those. I've personally been involved in one of these applications, so I can tell you that it really is a much, much simpler process than CBILS. You do not need a great deal of information. You simply give them your last 12 months turnover, I think it was, details of the bank that you want, the bank account that you want the money to be paid into, and relatively quickly, I think it was within 48 hours turnaround, there was a draft loan agreement from the bank that had been chosen just to be e-signed by the applicant. And that was literally the process, something like a 2-page online application. A loan agreement comes back if you're deemed eligible from the lender you've chosen, and you just go online and e-sign it. And then we got a confirmation that the sum would be made available within, I think it was about 2 or 3 weeks' time. Now, in that instance, it's worth mentioning that the lender chosen was the existing banker for the business. So that may have made the process a bit simpler, because obviously that bank would have had a lot of personal details already and information about the business. But it certainly was a very straightforward process. The amount of the loan is limited to 25% of turnover, and that will be gauged by the figure that you put into the application. It's a term loan which has to be repaid over a 6-year period, and the interest has been fixed at 2.5%. The government are covering the interest for the first 12 months, and there will be no setup fees, and the banks have obviously signed up to this and accepted that situation. So for 12 months, you will not be asked to make any repayments, but at the end of 12 months, the repayments will be calculated over the remaining 5 years of the 6-year term. So you do need to be in a situation, hopefully, where you can make payment, but the government are guaranteeing these smaller loans 100%. So I suppose the situation is that, God forbid, the business actually eventually did fail. The bank can resort to the government to recover their money. And although I'm sure in the first instance they will try to recover from the business, if the business no longer exists, they will get their money from the government. And that obviously has made the banks somewhat quicker to respond to these applications, and they seem to put far less obstacles in the way that they do with the CBILS, where obviously the loan amounts are that much greater. So if you feel that a sum of between 2 and 50,000 is going to see you through, then I would really recommend considering this process. If you have already made a CBILS application for 50,000 or less in the period when BBLS didn't exist, you can ask the bank to transfer that loan into the BBLS scheme. But what you cannot do is apply for BBLS if you've already applied and successfully received a CBILS loan that is in excess of 50,000. Okay.
I think you can do the other way around though, can't you? So yeah. if you've applied for a bounce back loan, yes, and now you discover you need more than the 50,000, then as long as you repay the bounce back loan, you can apply for the
Correct. No, that's absolutely right. But you can't come for a BBLS loan if you've got a CBILS loan existing and it's higher than 50,000.
Absolutely.
Yeah.
And there's a
just
limit
to add
on
that. Sorry, just to add on that, if you already have a CBIL which is less than 50,000, then you can obviously ask the bank to transfer into a BBL.
Yeah.
And that may well be worthwhile because the 2.5% fixed interest rate is likely to be preferable to the rate that your CBILS loan will have been negotiated at.
Yeah, and certainly if we I mean, a lot of the media is suggesting very high rates are coming out of the CBILS scheme.
Yes.
So indeed. And there's a limit also on the amount, the 50,000, but that's linked to turnover, isn't it?
It is linked to turnover. 25% of turnover is the maximum loan that you can receive. So you need to have a £200,000 plus turnover to get a maximum loan of 50,000.
That's right.
I'll mention it, although I think it's unlikely to apply to the audience. There are some businesses that are precluded from applying under BBLS, and that's banks, insurers, public sector bodies, and state-funded primary and secondary schools. But as I say, I think that's unlikely to impact our audience today.
Okay, very good. Thank you, David. I think, again, you know, it'd be useful for those that have applied for a business bounce back loan, if maybe just through the chat they can sort of raise a hand so we can get an idea of how many people have been successful or not, as the case may be. So I've got a couple of questions. Sorry, go on.
No, I was just going to say, maybe whilst people are thinking about that, I could just make the general observation that for many of these schemes, it will have become apparent, if it wasn't already, to the audience that it's important to have up-to-date figures for your business, whether it be financial accounts and or projections. Particularly if you're making loan application under CBILS, they will definitely be needed. So we are urging our clients, because of this, to seriously consider keeping their accounts as up to date as possible. In other words, if there's an accounting period we haven't yet dealt with, please send us the information ASAP, because if you need to ask for any of this support, in all probability, you will fall at the first hurdle if you don't have up-to-date financial information.
Great. Okay, so we're opening up now for live Q&A. I've got a few questions already on my screen here, so I'll run them by you. One's a follow-up question. So this is from Craig, can you please explain exactly how Macalvins petitioned to HMRC on furlough payments? This is in relation to annual payrolls, so directors' payrolls. What have we done to highlight the fact?
So on that, what we have done is we have formally written to HMRC, and we have also spoken to them as well, and we're hoping some positive response, and we're hoping that other firms do the same as well, pressurize HMRC, and hopefully they can provide us with further guidance and maybe change their stance. In terms of why Macalvins do this annually, so obviously payroll runs are dependent on how the client want them to be run. So it can be monthly, annual, biannual, quarterly. For administrative purposes and efficiency purposes where applicable, we do run annual payrolls, but that would be once agreed with the client.
And I think that's also because very much it's not necessarily known what the annual payroll will be for a director, as quite often directors use the director's current account to fund expenditure and then true up, true down at the end of the year. So I think it very much depends on how directors take their money and how much they're going to be taking over the course of a year. Because once you've done the payroll for a month, it's done. That's income that you've received and is taxable. Okay, so another question as well, it's actually, again, it's a follow-on question from Lee, which is just a bit more clarity over the self-employment scheme. So I'm just reading it out to you. So I was keen to know if the self-employment scheme has had its claimable period extended to October in the same way as the furlough scheme. So not so much the window to apply, but...
Lee, the answer to that is that currently the self-employed income support scheme is open-ended as to date. So I think the government are just watching to see, obviously, when they can relax lockdown and people can start trading again. But at the present time, applications are going in. I say one of my clients received the 7,500 full 3-month payment, which was taken into the end of June, but they haven't said that they are not accepting claims beyond that. It's currently open-ended. In other words, it hasn't been closed. No closure date's been given. I hope that's clearer.
Great, thank you for that, David. And then on BBL, the bounce back loan, is the turnover VAT inclusive turnover, or is it the net turnover for 12 months?
No, it'll be the net turnover, because VAT being a tax technically doesn't belong to the trader anyway. You're only holding it as a trustee in a way for the government until you file your next return, irrespective of the fact that you may be currently deferring your tax payment, because that, as you probably all know, that is one of the supports that's also available. But no, when they ask you for turnover, it's always net of VAT.
Okay, and I've got another question here from Lee as well. It's quite a long one, so I don't know if you can see that on your screen, David, rather than me read it out.
I'm looking. Well, it's a furlough one, so it may be for Muntazir, this one. Ah, sorry, it mentions bounce back loan as well.
Yeah, I can answer that question. So yes, the loan will be interest free for the first 12 months, and following the 13th month, yes, you'll be paying the 2.5%, because for the first 12 months, the interest payments are being met by the government. You can also pay the loan at any point in time, because there's no early redemption charges. In terms of you're free to place 50,000 into an investment, yes, you can, but however, when you are applying, you probably did confirm that you are facing any business difficulties. So it depends on the actual situation.
If I could pick up on that one, I definitely would not advise investing the money that you receive from a BBLS, because, as Muntazir has just said, part of the application process is trying to make sure that the money is actually needed to prop up the business because it's suffering difficulties from the coronavirus. What we don't know is if at the end of this period there's going to be any checks made on applications and how monies have been used. So I personally would prefer to advise clients that the monies that they receive from one of these loans should be being used to help the business through this difficult period. And if it goes straight into an investment, that could possibly be problematic later down the line.
And so I've got another question here. If one bank refuses the loan, can you go to another bank?
The answer is yes, you can. You can apply to other banks if you are rejected. I suppose the problem is that it's obviously going to prolong and lengthen the process, and in all probability, if they're all applying similar criteria, you may get a rejection from the other bank. But I think probably before doing that, my advice would be try to find out why you're deemed ineligible, and if you're able to correct that before your next application, do so.
Great, and just conscious of time, but if we can get through these last few questions here. So this is a very interesting question. As a company director, one has applied for a BBL loan through a company, but can they also apply for a BBL loan through a separate business, which is a property rental business under self-employed?
Yes, you can apply for a loan for more than one business. Yes, you can.
Great, that's good. And I've got a question here from Sunil asking if we can please repeat briefly how to make an application under CBILS if you've already made one under the bounce back loan scheme.
So again, assuming that you made a bounce back loan with your current lenders, you will get in touch with your current lenders and if you need more than £50,000, then you can apply for the CBIL. Again, you'll need to have management accounts, your latest accounts, cash flows, and within your cash flow forecast, you will need to demonstrate that you have taken additional government support, such as the BBBL, or maybe the furlough, or tax payment deferrals as well, and then demonstrate how much more funding is needed, and then make the application.
Okay, just got one final question. We have overrun, but I think we should answer it if we can. This one is, if you've applied for a CBILS loan and been accepted, but then changed your mind and apply for the bounce back loan scheme, if you get rejected for the bounce back loan scheme, can you reapply for the CBILS?
Well, if you've already got acceptance for a CBILS loan, I would first of all question, is it below or above the 50k limit? If the CBILS application has been approved below the 50k, all you need to do is ask the bank to switch it to the BBLS scheme. If it's over the 50k, then I can't think why a business would reject that and ask for a BBLS. But you could reject the CBILS loan and go for BBLS. The process is a lot simpler and you're not likely to be rejected. But my question would be, will it provide you with enough funding because of the 50k cap?
That's right.
And just to add on to that, if you made the application as CBILS, and since the bounce back loan has been introduced and your application was in transit, the bank are most likely to transfer your CBILS application to a BBL, provided that the loan was under 50k.
Okay.
So that was an anonymous question, but to whoever asked it, I mean, if you want to give either David or Muntazir a call after this, then we can go through it in a bit more detail. That's it, everybody. So I just want to thank everybody for coming. In terms of follow-up, please feel free to reach out to David, myself, or Muntazir. Happy to answer any questions that we can, but also obviously your client director that you're already working with. I hope you found the subjects that we went through of interest. We're going to try to do this on a regular basis. We've had a great turnout, so I'm very, very happy that we've had such a turnout. It'd be great to get some feedback from you as well if you felt this format was useful to get some information on these sort of topical areas. But of course, it won't always be about COVID schemes. We'll try to bring in other things. So if you've got suggestions and ideas, please put them forward, again, to either David, Muntazir, or myself, or indeed the client director that you're working with on a day-to-day basis. The webinar has been recorded, so it'll be available on our website later on today if you really want to hear it all again. Other than that, it leaves me to say thank you and look forward to catching up again very, very soon.